Good morning, friends. Today we are going to see cash book. Okay. Now, first try and understand why that cash book is used for. Basically, when we talk about cash book, we talk about all the cash transactions only. So that may be cash receipts or that may be cash payments. So we will just see today the process of entering all these cash transactions in the books of accounts. So let us start with the basics. What accounting means is nothing but the process of recording the transactions and for keeping the records that we are going to enter the transactions into subsidiary books. Now, if you see the list of subsidiary books, you have purchase book, sales book, purchase return, sales return, bills receivables and payables book, then cash book, bank book, and journal. So all these books are used for recording the transactions on daily basis. Now, out of all of them, if you see, only cash book and the bank book, all these two are in the form of an account. So today we are going to see how to record transactions in cash book. So we are going to see the procedure which is used and the format which is used. So let us start with cash book. So cash book is basically used for recording all types of cash received and cash paid transactions. Now it's a book of original entry since all the transactions are recorded into the books of accounts for the first time since it's a subsidiary books. Now all the transactions will be recorded at date wise chronologically. It has debit and credit side, so you can easily understand this is in the form of an account. So all other subsidiary books, if you see, they are just the records, but cash book is in the form of an account which has debit side and credit side, and at the end of the year or at the end of the month we are going to do balancing of the same to find out closing balance left. So we'll just check out. It is in the form of an account, and that's the reason why it functions as a subsidiary books. At the same time, it functions as a primary book because since all this is already available in the account form, we are not going to transfer it to the ledger, but actually you're going to directly take this to the trial balance. How you're going to do the closing of the accounts? So at the end of the time, you're going to check out debit and the credit side of the account and you're going to balance it. Now you always remember when it comes to cash book, your debit balance will always be more because you cannot pay more cash than you have. So always you will have some amount of cash with you for making the payments. Okay, payments can never exceed than the receipts that you have. Okay, so that's the reason why always your debit side will be more and balancing amount will come to the credit side as the balance, debit balance amount, which will be carried forwarded to the next year. Now, when it comes to rule of accounting, if you remember, we are basically talking about the real account because in real account, your cash is a asset. For accounting of any asset, we make use of a rule, that is debit what comes in and credit what goes out. Now, what we are going to do in cash book, we are only going to talk about the receipts and the payment side. So receipt side means whenever you receive the cash. Now when cash received, then you can always see debit what comes in, means whenever you receive the cash, debit effect will be there. So that is the reason why we also call debit side as receipt side. And when you are making payment, cash goes out. So cash goes out, so it will be giving credit. So that credit side will be called as the payment side. So let us check the format. Now depending on the transactions, simple cash book, 2-column or 3-column cash book can be used. Now we are going to first start with what is the basic format of a cash book. So in a cash book, you can see this is your debit side till this. This is in T form. This is debit side, and from here it is credit side. So date, whenever you receive, there may be some receipt number. Then particulars, or you can write it as a receipt since you are receiving the cash. So to this side, if you go, whenever you make payment, cash goes out, so credit effect. So whenever you make the payment, you make use of voucher, and that's the reason why here will come voucher number. And payments or the account which gets this account get credited, and the other account which got debited, we will be writing it here. Now we'll see the format of bank book also. Bank book, if you see, bank book is specifically used for recording only check transactions. Let it be check issued, check received, check payments. Okay, all these transactions are recorded in the bank book. Means all bank related transactions will be recorded in bank book. So you can see, if you check out this format and the earlier format, they are quite similar. So here date, particulars, and the amount which you receive. Now, since it's a bank book, you can understand bank is a personal account, debit the receiver. So whenever bank receives something, debit effect, and when the bank gives something, when bank makes the payment, then bank is giver. So whenever bank make payments, credit effect. And if we see this format and this earlier format, that is quite similar. Whenever bank receives, bank is a receiver, debit effect, and whenever bank pays, then credit effect, because bank is giver. Now, since this format and this format is quite similar, instead of using two different formats, you may be using, for convenience purpose, only one format, and that will be called as two-column cash book. So you can see here what we are doing, all the receipts, let it be cash receipts or bank is the receiver, both will record to this side. So in cash column we'll mention the amount, here in bank column we'll mention the amount when the bank receives the money and bank balance increases. Now similarly, whenever cash payment is done, we'll be mentioning the other account involved here, and the cash amount will write whatever balance is going to reduce of the cash, that will be writing here. If bank is making any payment by issuing the check, then we'll be writing to this side, and that amount we are going to mention in the bank column. So you can easily understand here, if I'm writing anything, cash balance receipt side hai, your cash balance is going to increase, and here if I write bank balance is going to increase. Same way to this side, if I write bank balance will reduce or cash balance will reduce, depending on whether you are receiving cash or bank is the receiver, depending on whether bank is the one who is making payment or you are making payment in cash, the transactions will be recorded accordingly. Now, we already see that sometimes we give cash discount to the people for facilitating the trade or getting immediate cash payment. And for that reason, it may happen sometimes you allow the discount to others, and sometimes you receive the discount from suppliers. In both the cases, this discount we know that needs to be recorded. The same thing that we are going to record in the cash book also, and that's the reason why we come with the three-column cash book. This is the actual cash book which is being used, so which has the discount effect also. Whenever you allow the discount when you receive the money, that will be lost, so it comes to debit side. And whenever you get the discount, that is the discount received, it is a profit or gain. That's the reason why it is shown to the credit side. Okay. Debit losses and credit incomes or gains. So this is the format which we are going to use for recording all the different cash and bank related transactions. Okay. Hope you understood the format. Now we'll see the sums in the next lecture.